Let's bring in Jefferies Weisfeld, tech sector specialist at Jefferies, for his thoughts on this quarter. Jared, does Microsoft deserve the valuation it has?
So listen, by all accounts, it was an unbelievable quarter. I mean, you're talking about revenue at this kind of scale, $43 billion in quarterly revenue, up 17% year on year. And, you know, when you listen to what Satya and Amy were talking about, the CEO and the CFO of the company, they're talking about these digital transformations that are accelerating at a very meaningful rate. Azure, which is Amazon's cloud offering, grew by 48% year on year this quarter. It showed zero deceleration from last quarter, and, you know, Street and buy side was certainly bracing for a decent deceleration, and it shows the resiliency of this model. Amy, the CFO, talked about some of these pandemic sectors that were hit the hardest starting to recover, SMB starting to recover. So at the end of the day, you know, it's tough to make a valuation call because obviously the market's sitting on all-time highs. But when you look at a structural grower like this, growing top line by 17%, giving you the operating leverage, you know, the bull case is certainly resonating here, and all aspects of the business are taking off.
How do you connect the dots to other companies, Jared, in terms of the strength we saw in Microsoft and where else we could see the strength, or where Microsoft is competing well against another company?
Absolutely. So if you look at the biggest drivers to the top line beat this quarter, their Windows OEM business grew revenues by about 1% year on year. Might not sound that much, but Street was calling for about a 10% decline. That's a pretty large delta. We saw strength from Intel last week. They beat revenues by $2.5 billion. So I think it speaks to the rest of the PC supply chain in terms of strength of the business. The other obvious segment is the Azure segment in terms of the cloud offering, showing robust growth at 48% year on year. You know, I have to imagine that bodes well for the rest of the CSPs, the cloud service providers, when you think of Amazon and Google with their selective offerings. Really just, you know, and I think that speaks to the critical point here. When you go through, you know, over the last 9 months, we've had so many digital transformations that occur at such a rapid pace because of COVID, and it's benefiting all of the CSPs in a very significant way.
Hey, Jared, it's Tim. In terms of what's been going on in the chip sector, and we're looking at AMD after the hours, Texas Instruments, and there's this real disparity, obviously, between the function of a lot of these different chips and really where these multiples trade. Bottom line, though, is that semiconductors, and whether you're looking at the SMH or something that will track the entire sector, has led tech and has led it every single time. And it seems like it kind of led us into this earnings period, which has also been extraordinary. So what part of the semi sector are you most excited about here, and what's worth the multiple?
Yeah, absolutely, Tim. So I think semis continue to remain my favorite subsector within all of TMT. Obviously, they've had a strong year-to-date run, but I think that strength continues. When you look for recovery plays, you know, all the conversations that I'm having with clients and investors are all about how do we think about gaining exposure to the cyclical recovery and hopefully a post-COVID world. And that's going to start with analog semis, right? It's going to start with the restocking and the leverage to the industrial and automotive trends. And you're seeing that TI just absolutely crushed numbers this evening. They grew revenues by 22% year on year, driven by automotive and industrial. And, you know, this is a large GDP type grower, and they just posted that 22% type revenue growth. And the thing to keep in mind there is that inventories are on the decline. So it's sort of the perfect storm for analog semis, where you've got the restocking that's occurring because inventories are lean, resells are strong, and that certainly benefits the group. And the other obvious subsector that's benefiting right now is compute. When you think about the infrastructures that are being built out to support the work from anywhere type lifestyle, AMD is certainly benefiting, right? You had 53% year-on-year revenue growth as their PC server and gaming business absolutely accelerated in a pretty meaningful way, partly due to strong execution from the team at AMD as well.
But you would choose Intel over AMD, Jared. Do I have that right?
When you look at the risk rewards between the two, it's pretty interesting because if you take a step back with respect to what happened last week at Intel, they beat revenues by $2.5 billion versus the Street, right? Just a massive revision. They accelerated their 10 nanometer and 7 nanometer process technology roadmaps versus expectations, and they gave a Q1 guide that was above the Street. And Pat Gelsinger, the new incoming CEO, who's incredibly well respected, came on the call and talked about committing themselves to the IDM model, the integrated device manufacturing type model, where they're going to manufacture their own chips for 7 nanometer in 2023. So when you combine all of that in the context of where the stock is trading at a 50 to 60% discount relative to the broader group, A lot of conversations I'm having with investors are how do we think about just the relative risk reward in Intel versus AMD?
Jared, always great to get your insights. Thank you. Jared
Great. Thanks so much.
Weisfeld of Jefferies. Let's get back to Josh Lipton. He's got more from the call on Microsoft. Josh.
So, Melissa, Microsoft CFO Amy Hood just giving guidance, and you see the stock taking another leg up in the after hours. Let me bring that to you. Remember, she goes segment by segment. So, productivity and business processes, that would be Office 365, LinkedIn, 3.35 to 3.6 billion for Q3. That is stronger than the street was looking for. Intelligent Cloud, that's a segment that would include Azure, 14.7 to 14.95 billion. Again, stronger than the street was forecasting. And finally, more personal computing, 12.3 to 12.7 billion. Street was closer to 11.6 billion. Within that segment, she certainly called out gaming, saying they look for revenue growth there of 40%, in part driven by those new consoles. Amy Hood saying we have executed well in the first half of this fiscal year. Melissa, back to you.
Josh, thank you. Josh Lipton, stocks up 5%. Guy Adami, don't know if you want to comment on Microsoft or Jared's choice of Intel over AMD.
No, I understand what Jared's saying about Intel. I think Dan would probably agree. And by the way, we talked about it at 5 o'clock. We've talked about it for a while. Dan talked about Intel at 48. It traded up to 63 and change. So good for Dan. And in valuation, Intel is a much more compelling case. I totally get it. I'll just bring up Texas Instruments real quick, because why not? It was a very good quarter, and he mentioned the revenue growth. If there's a problem with Texas Instruments, you're not getting the same EPS growth. You had big operating margin beat, which is a really good thing. And their profit in one of their segments was significantly better than the street was looking for. My problem with Texan here is not revenue growth, it's EPS growth, and I think it's getting dragged up with the rest of the chips. So in order, if you want to play the game, I'd rather AMD over Intel and Intel over Texan.
Well, there is no game, but I guess you can play it if you choose. Tim, I don't know where you stand on any of those three.
I stand offended that Guy played the game by himself, is what I do. I mean, and I think it's an embarrassment to us. No, I'm just kidding. It's fine. Intel over AMD. I'm long Intel. Haven't been happy with the path forward and a lot of the news flow. And I think Texan over AMD as well. But Intel over Texan. And it's really a function of both. I think the storyline at Intel is far from exciting and bullish, but this is still a company that's had a record top line year in the last fiscal year. I mean, and has enormous cash flow. So there's a lot to fix there. They're going to fix it. I think the story at Texan is a little more commoditized and a higher multiple that's a little bit more difficult to justify relative to AMD. But that's I think why we play Would You Rather.
Favorite chip stock, Dan?
I'd say Intel. And I think that, oftentimes, you hear that old saying in the markets about buying low, selling high. We've been conditioned over the last few years to buy high and just try to sell higher. Every once in a while, you have a good opportunity to buy a unique value when the sentiment is really poor, right in front of like some sort of big fundamental shift, whether it be secular or whether it be relative to execution. And I think that's probably where Intel fits right now. So I think somewhere in the mid 50s, where the stock is right now, is probably a really nice opportunity. I think you have risk to the downside of about, 10, 15 or so percent. But to the upside, I think you probably have up to 70 over the next year or so if things start to go right under new management.
Shepard Smith here. Thanks for watching CNBC on YouTube.